Hey everyone, it is Julie here with TipRanks. Today we're taking a look at 3 strong buy dividend stocks priced under $50 per share. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we are talking dividend stocks. We'll be looking at 3 companies that all pay out a healthy dividend, plus also come in with a strong buy consensus from Wall Street Analysts. We're going to take a look at these companies, what it is that they do, those dividend details, and of course, what Wall Street is predicting for the stock's future. Before we get into those, don't forget to download the TipRanks mobile app so you can access all of your favorite investment research tools on the go. Links are in the description down below. Now let's get right into our 3 strong buy dividend stocks. First on the list today, we're taking a look at the Travel and Leisure Company. Their stock trades under the ticker TNL, currently priced at $46 per share. Over the past 1 year, they have grown 26%, climbing 14% in the last 3 months. Travel and Leisure Company is a well-established name in the timeshare industry. Based out of Orlando, Florida, their primary business is the development, sale, and management of timeshare properties in prime vacation destinations. Their properties are offered through multiple brands and feature well-reputed names such as Margaritaville, Worldmark, and Wyndham. In addition to timeshares, they also work in the timeshare exchange business, helping timeshare owners trade time amongst themselves. This business, which they operate through RCI, counts over 3.5 million members and generated over $170 million in revenue during the last quarter. Travel and Leisure does pay a quarterly dividend. Now, they did have to cut their dividend back in 2020 during the pandemic, but they have been steadily increasing it back ever since. And currently sitting at 50 cents per share, it is now back to those pre-pandemic levels and has a current dividend yield of 4.02% and a healthy payout ratio at about 23.5%. They shared their 4th quarter and full year results back on February 20th, where they did come out with a solid earnings beat. For their Q4, the company reported earnings per share of $1.98, coming in well ahead of the $1.37 forecasted. For their 4th quarter, they reported net income of $129 million, and for the full year had adjusted EBITDA of $908 million. Looking forward for 2024, they're expecting that full year adjusted EBITDA to be between $910 to $930 million, so a slight year-over-year increase. Recently, near the start of March, we did have an analyst from Truist who increased their price target on the stock. The firm's view had been that it would take several consecutive quarters of normalcy for the group and delivering the way they did pre-COVID in order for valuation multiples to begin to ratchet back up towards historical levels. And this past earnings season, the company clearly achieved that goal. Travel and Leisure is rated a strong buy with 8 current analyst ratings, breaking down to 7 buys and 1 hold. With that strong buy rating, they have an average price target of about $53 per share, which would imply upside potential of 15% from current prices. Looking down below, on the low end, we do have a hold rating here with a downside of 4.4%. More recently, we have a high-end price target of 41%, and that's that rating coming from Truist Financial. Second on the list today is Dine Brands Global. They trade under the ticker DIN and are priced at about $46 per share and are hopefully nearing a bottom here soon, as the stock is down about 30% over the past year and has fallen nearly 5% in the last few months. Dine Brands Global is the firm behind restaurant chains such as Applebee's and IHOP. Between their 3 brands, they have over 3,500 restaurants across 18 international markets, and Dine Brands is one of the largest full-service restaurant companies in the world. Applebee's is known as one of the world's largest casual dining brands, serving over 13 million boneless wings every single year. On top of that, their IHOP restaurants serve over 400 million pancakes annually. Of course, the 2020 pandemic did largely impact Dine Brands, and the company suspended their dividend for a while, but it has been reinstated since 2022, and they have been paying it on a regular quarterly basis. And their current quarterly dividend comes in at 51 cents per share for a dividend yield of 4.29% and a healthy payout ratio of just over 30%. They shared their 4th quarter results back on February 27th. They did manage to come out with an earnings beat, but did see some slight declines in revenue. For their 4th quarter, they reported earnings per share of $1.40 compared to the $1.16 expected. Looking at their 4th quarter revenue, it came in at $206.3 million, which was down slightly from the year before, but they said that this decline was primarily due to the refranchising of 69 company-operated Applebee's. Recently weighing in on the Dine Brands stock was an analyst from Benchmark who did increase their price target. They noted the companies recently reported Q4 revenues that matched the expectations and their solid earnings per share beat, saying that they believe the only explanation for the current depressed valuation of shares is an investor desire for tangible performance improvement at Applebee's, which they believe can be delivered in fiscal 2024. The stock's strong buy consensus is based on 6 current analyst ratings with 5 buys and 1 hold. And an average price target comes in just above $60 per share for an upside potential of 30%. Looking at our most recent ratings down below, on the low end we do have our hold rating here with a slight upside of nearly 3% and a high-end rating coming from Truist Financial with an upside of 58%. And third on our list today is Cedar Fair. They trade under the ticker FUN, currently priced at $42.70 per share. They're fairly flat over this past year, down 1.9%, but have climbed up 12% in the last 3 months. Cedar Fair is an amusement park company. They have 17 different parks and 11 accommodation properties across the U.S. But the big news for the company recently is that they are going to be merging with Six Flags. The merger will create a combined entity with an enterprise value of approximately $8 billion, and as part of the merger, Cedar will end its master limited partnership business structure. Once the merger is complete, the combined entity will boast an expanded portfolio of 42 amusement parks and 9 resort properties located across 17 different states, Canada, and Mexico. Cedar Fair does currently pay a quarterly dividend of 30 cents per share, giving them a dividend yield of 2.79% and a payout ratio just shy of 50%. Looking at their last quarter, they did come out with a wider than expected loss per share. However, revenue did come in ahead of expectations. For their Q4 on February 14th, they reported a loss per share of 22 cents. However, net revenues came in at a record $371 million, which was an increase of 1% or $5 million compared to the same quarter last year. One analyst from Oppenheimer recently weighed in on the stock. He said that their upcoming merger with Six Flags simply swamps any other news at the company. Poised to merge with Six Flags and dissolve their MLP structure, they believe fun is an interesting investment opportunity. The merger should deliver meaningful synergies and provide additional upside through operational improvements. The transformational deal will make Cedar Fair the largest regional theme park operator in North America with 42 locations and increase its regional diversification. The fun stock is currently rated a unanimous strong buy with 7 analyst ratings. And the average price target comes in just above $51 per share for an upside potential of about 20%. Looking at our detailed list of ratings down below, we have a pretty close range of price targets. Our low-end price target is this one with upside of 12.4% and several around that 21% upside mark, a high-end price target here with an upside of 28%. So that is a quick look at 3 strong buy dividend stocks, all priced under $50 per share, and all with some very different opportunities here. So let me know which of these 3 stocks caught your eye in the comments down below. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you're always doing your own research and due diligence and stick to your own investment plan. Thank you guys so much for watching. Have a wonderful day, and I'll see you back here next time.